A seismic shift is underway in North America, one that is reshaping the continent's economic landscape and altering the balance of power between two of its closest neighbors. For generations, the United States and Canada have been bound by deep economic ties, forged through decades of cooperation and mutual reliance, especially in the energy sector. Now, those ties are being tested, sending ripples through global markets and causing uncertainty among investors and policymakers worldwide. For decades, Canada was the United States' reliable energy supplier, fueling American homes, industries, and even shaping the very infrastructure of North American prosperity. But as of September 3, 2025, that era is ending. Canada is turning away from its southern neighbor and looking west to Asia's booming economies, where demand for energy is surging and new opportunities beckon. This isn't just business. It's a bold move for economic independence, a strategic decision to chart a new course and reduce reliance on a single trading partner. New pipelines now point to the Pacific, and the first Canadian LNG shipments are set to sail for Asia, breaking a tradition that defined the U.S.-Canada partnership and opening a new chapter in global energy trade. Canadian leaders, wary of U.S. political volatility and shifting policies, are determined to diversify and protect their economy from American unpredictability, ensuring stability for future generations. The implications are huge. Global energy prices, diplomatic relations, and the very foundation of North American cooperation are being redefined, with far-reaching consequences for both continents and beyond. Canada's pivot is more than a trade story. It's a nation rewriting its future, sparking outrage in Washington, igniting debate at home, and setting the stage for a historic confrontation that will shape the destiny of North America for years to come. To truly grasp the scale of Canada's recent shift in energy strategy, you first need to understand the long and complex history of its deep-rooted energy ties with the United States, a relationship that has shaped both nations for decades. For generations, Canada stood as America's top foreign energy supplier, providing a steady flow of oil, gas, and electricity. This partnership became a pillar of U.S. energy security, ensuring American homes and industries had reliable, affordable energy. In 2024 alone, Canadian oil and gas exports to the U.S. were worth a staggering $170 billion, fueling American refineries, powering vehicles, and helping keep consumer prices stable across the country. Geography and policy made the U.S. a natural, insatiable customer. Over time, a vast network of pipelines stitched the two economies together, creating a seamless flow of energy resources across the border. But this deep dependence came at a cost. Canada's energy sector became vulnerable to the unpredictable swings of U.S. politics, regulatory changes, and shifting market demands. When American demand dropped, or when cross-border projects stalled due to political disputes or environmental concerns, Canada felt the economic pain almost instantly. Projects halted, jobs lost, and revenue slashed. Selling almost exclusively to the U.S. meant Canada often had to accept lower prices for its oil, missing out on the higher profits available in global markets. The lack of export diversity left Canadian producers at a disadvantage. Over time, frustration grew among industry leaders and workers alike. There was a growing realization that Canada needed more control over its own destiny and better access to world prices to ensure long-term prosperity. The decision to break this one-sided relationship and pursue Asian markets didn't happen overnight. It's the result of years of mounting unease, economic setbacks, and a desire for greater independence. Now, Canada is taking bold steps to diversify its energy exports, a direct response to the risks of relying on a single, unpredictable partner. This move is ushering in a new era for Canadian trade, one defined by resilience, opportunity, and a broader global reach. Canada's break from tradition is reshaping its energy future in ways few could have imagined just a decade ago. On the Pacific coast, this transformation is now a reality as massive infrastructure rises along British Columbia's rugged shoreline. By mid-2025, the first Canadian LNG tankers will set sail from British Columbia bound for Asia. This milestone opens a new chapter in Canadian energy, one that extends far beyond North America. For the first time ever, Canada will be able to sell its abundant natural gas to buyers around the world, not just to its neighbor, the United States. This shift gives Canada a seat at the global energy table. Access to Asia's booming markets means Canadian gas can command higher prices, generating billions in new revenue for the country and supporting thousands of jobs at home. But this is more than just economics. It's a strategic move on the world stage. Japan, South Korea, and China are all eager for reliable, cleaner energy, and Canada is stepping up to meet that demand. Building this LNG gateway took years of planning, billions in investment, and overcoming fierce environmental and regulatory challenges. The result is a more resilient, globally connected Canadian economy. Canada's new LNG exports are more than a business deal. They're a symbol of national independence, innovation, and a bold new global role for the country. As the first tanker departs, Canada takes a confident step onto the world stage, signaling its arrival as a major player in the global energy landscape. Canada's energy pivot landed in the middle of a political storm. With Donald Trump's re-election in 2024 and his aggressive America First agenda, Canada's move was seen as betrayal, not strategy. The Trump administration responded with threats, steep tariffs on Canadian goods, and a 10% tariff on energy imports. The message was clear. Canada would pay for seeking new customers. Rhetoric escalated with accusations of backstabbing and even veiled threats about annexation, plunging relations to new lows. Trump's policies aimed to reassert U.S. dominance and punish Canada's independence. Instead, the backlash only confirmed Canada's fears about over-reliance on the U.S. rather than retreat. Canada doubled down, determined to chart its own course. The standoff set the two allies on a collision path with global consequences. As tensions peaked, Canada's political landscape shifted. In April 2025, Mark Carney's Liberals won a minority government, bringing a steady hand and a clear vision for economic sovereignty. Carney doubled down on diversification, launching aggressive outreach to Europe, the UK, and Asia-Pacific nations. His strategy built a web of trade deals to shield Canada from US pressure and showcase Canada as a reliable global partner. The upcoming G7 summit in Alberta became Carney's stage to contrast Canada's cooperative approach with America's isolationism. Carney's leadership is defined by balancing US conflict with forging new alliances, fundamentally repositioning Canada for a future beyond its traditional ties. This bold pivot is now at the heart of the North American dispute. The feud quickly spread beyond oil and gas to critical minerals, vital for everything from EV batteries to defense tech. Canada, the US's top supplier of minerals like nickel and cobalt, suddenly had new leverage. In response to Trump's tariffs, Canadian leaders hinted at restricting mineral exports, threatening to disrupt US supply chains. This escalation exposed a deep flaw in America's strategy. It can't achieve mineral independence without Canada. Trump's policies risked pushing Canada to sell these resources to Europe and Asia instead. The minerals standoff turned the trade dispute into a high-stakes game with both economies' futures on the line. Canada's message was clear: it holds powerful cards in this economic showdown. The trade war's impact hit financial markets hard, wiping out billions in value and rattling investors. The unraveling of US-Canada trade injected deep uncertainty into both economies. By April 2025, the S&P 500 had plunged nearly 19%, with tech and green energy stocks suffering the most. Tesla's shares crashed over 50% amid fears of disrupted Canadian mineral supplies. Cross-border supply chains, built over decades, now face steep tariffs and rising costs. Businesses scrambled to adapt, stalling investment and threatening growth. The fallout proved that trade wars have no winners. Policies meant to protect the US were inflicting real harm. The markets delivered a clear verdict: stability and cooperation are essential for prosperity. With the US turning hostile, Canada launched a global campaign to build new economic bridges. Prime Minister Carney's government raced to sign trade and investment deals with Europe and Asia, making diversification an urgent priority. European nations, eager to move away from Russian energy, saw Canada as a stable LNG supplier. Asian manufacturers sought long-term access to Canada's critical minerals for their tech industries. Each new deal pulled Canada further from US economic gravity and closer to a network of reliable partners. The upcoming G7 summit in Alberta will showcase Canada's new role as a champion of international cooperation. This global outreach is Canada's answer to American protectionism, a bold bid for a secure, independent future. The Canada-US dispute marks a turning point for North America and global trade. Canada's quest for independence and America's nationalism are fracturing a once stable alliance. The fallout will reshape resource flows and global power balances for years. For Canada, it's a risky but necessary leap toward resilience and new markets. For the US, it's a warning about the dangers of protectionism and alienating key allies. As old certainties vanish, new alliances are forming. Canada's pivot is part of a broader global shift. Middle powers are stepping out of the shadows, redrawing the map of international trade. The outcome will reveal whether the future belongs to cooperation or conflict.